excited to be able to share this webinar with you. And I just want to go over a few housekeeping things. Again, feel free to introduce yourselves in the chat if you haven't already. We really want this to be as interactive as possible. And our goal is really for you all to get to know each other as well as soak up some of this amazing programming. A few housekeeping items. We do have an ASL interpreter today who should be pinned to your screen. If for some reason you're not able to see the interpreters, go ahead and click the 3 dots on the side and make sure that they are pinned to your video screen. This is day 2 of our first ever Arts Alliance Help Desk workshop series. And this program has been made possible by the Illinois Department of Commerce and Economic Opportunity. It's really designed to help the creative sector in Illinois expand and thrive. For today's program, we do have the incredible Gillian Gorrra from BDO, who will introduce herself in just a second, who's going to go over some key systems for setting up your nonprofit. We'll also have the chat open throughout. We decided to disable the Q&A section today and just really use the chat for questions. There'll be some moments for you to ask your questions throughout, but make sure if there's something that you're wondering about, feel free to just pop it in the chat. We really want to hear your questions and concerns and reactions. And before we get started, though, I do just want to give us a little overview of today. So this is what we'll be spending time on throughout our time this morning. And to kick us off, just a little bit about Arts Alliance Illinois. So we are a statewide arts advocacy organization. We work to build the creative sector's power through advocacy, policy change, and connection to much needed resources to help improve quality of life for communities and disciplines in art across the state of Illinois. We do a lot of different kinds of work, which includes direct advocacy and policy work. We conduct research about the creative sector, and we also provide direct technical assistance, which is who we are today at the help desk, including providing support for navigating public funding and public grants for the arts and culture sector. Our help desk is here for you to navigate those public funding opportunities and connect you with resources, whether it's grants, loans. We have a running list of public funding opportunities on our website. And we also have staff who are able to connect with you one-on-one to successfully help you apply for public funding. We know that creatives in downstate Illinois and on the south and west sides of Chicago face disproportionate barriers to getting access to the resources that everyone needs. And so we're really here to be a connector with the resources, experts, and fellow community to make sure that all of us can thrive. We do have really exciting programming coming up in addition to this Getting Started series, which we had at the beginning of the month focused on creative businesses. And you are currently in the Getting Started series for creative nonprofits. We have some more programming coming up throughout June and July this summer and in September, really about growing and expanding your creative venture. All of the recordings of our programming will be on the Arts Alliance YouTube, and stay tuned for some programs in those series, as well as some standalone workshops on lending and loans, on government funding 101. So keep an eye out for that. I'm really excited today to have an expert that's here to talk to us about systems for success for your creative nonprofit. So I'm going to go ahead and hand it over to you, Gillian. And again, we're so excited that all of you are here today.
Thanks so much, Jess. I'm going to just share my screen here. And hello, everybody. Welcome to day 2, Systems for Success. My name is Gillian Gorrra. I'm a consultant with BDO. BDO is an accounting firm, an international accounting firm, but I work within a smaller niche department in BDO. I work with our nonprofit and grantmaker advisory practice. Before I came to BDO, I was in the world of arts and culture. So I have a master's in nonprofit management, but I have a bachelor's in musical theater. I wanted to be an actor and did that for a while. And then I moved into administration. So before going into consulting for nonprofits, I was a managing director at an arts organization here in Chicago for over a decade. And in that role, I oversaw finance, facilities, and human resources management. So I'm excited to be with you all here today. To see what you're interested in getting to know. So we're going to do a welcome, which we're in the middle of today. And then we're going to talk through some just pretty fundamental concepts in several areas of nonprofit financial management. So that's where I really, where my expertise live is in nonprofit financial management. So we're going to be talking about internal controls. We're going to be talking about some basic metrics to think about when you're thinking about financial health and sustainability at a nonprofit organization. We're going to talk a little bit about some really fundamental but important budgeting concepts in terms of planning. And then I've got some resources that I can share with everybody today. I do see some things coming into the chat, which is really, really exciting. I'm already seeing that some of you are artists in what you're working in. I want to go ahead and double down on what Jess says and really encourage you all to use the chat. I'm going to try my best to answer questions as we go. And then we have a couple of breaks in the presentation today for questions specifically as well. But I'm not the only one coming to today's presentation with any kind of background or expertise. You all have that as well, and I really invite you to share with each other, learn from each other. Let me know how you're feeling about what I'm saying. Maybe you agree, maybe you disagree. I'd love to hear it. So with that, I want to understand a little bit more about all of you. So Jess is going to put a poll up on the screen here. This poll has 2 questions in it. I would love for you to answer both of them. I'm curious about why you showed up today. What are you interested in learning? Maybe you are thinking about doing starting a nonprofit. I think I saw someone in the chat say, I wonder if our organization should move to nonprofit. Maybe you're new in a nonprofit and you want more information. Maybe this is not your first nonprofit rodeo at all, but like you're like, hey, there was a workshop. I'm going to come to it. Maybe something else. And then I also want to know if you are already involved in a nonprofit organization, what is the budget size of that organization? I'm going to give everybody just a few more moments to engage with this poll. Make sure you hit that submit button too once you've answered the questions so that we can see them. And then I'm going to go ahead and share the results. They're anonymous, by the way, to just see who's here. So go ahead and answer these questions if you've not. If for some reason the poll function's not working for you, sometimes depending on the version of Zoom that you have, it might not be, go ahead and put it in the chat. And Gigi, if you have more than one answer, chat them in, let us know. But I love that. Okay, everybody, I'm gonna go ahead and end this poll and share the results. And let's see who's in the room today. So it looks like just about half of you are considering getting into the nonprofit space, and that makes sense. Couple of you are new to nonprofits and want to deepen your knowledge and experience, right? Couple of you are not new, which is always great to just have that great breadth of folks and experience levels in the room, again, to share with each other. And those of you that are already working or are some way involved in a nonprofit, it looks like most of you have a budget size in the $250,000 to $500,000 area. Some of you are a little lower. And then there's a handful of folks where it's not applicable yet, or we're not sure. That's really helpful for me to understand just a little bit more deeply at the beginning here, maybe what your needs are, what you're curious about. But again, go ahead and put it in the chat as we're going along here so that we can do our best to address it. All right, so our first of 3 topics today is internal control. So we're really digging right away into what I would call fiscal operations, right? How are we actually getting our finance house functioning and functioning well in our nonprofit organizations? So the first thing we're going to talk about is what even are internal controls, right? We see here that internal controls are mechanisms or rules that we might have around the processes and procedures that we have in our organization, in our finance office, that are really going to help us ensure accountability and minimize risk. So why do we have them? First and foremost, we want to protect our scarce resources in the nonprofit sector as much as possible. We want to make sure that we're not losing any resources to potential error, definitely fraud. We'd love to think that the nonprofit sector is full of a whole bunch of do-gooders, and for the most part, it is. But there is fraud occurring just like there is in any other sector of business, and we want to minimize that, if not mitigate it entirely. We want to make sure that our resources that we have are being used appropriately, that they're serving the missions that we say that we're serving, that we're really allocating a good portion of our resources to what's most important to us as an organization. And then we see here as well, when we have strong internal controls at our organization, it's really going to help us protect the accuracy of the data that we're recording into our books, our financial systems, whatever we're using, and then turning back out to our management, to our board of directors, to our stakeholders. We really want to make sure that our data is accurate and reliable. I do want to talk a little bit here about the relationship of the board of directors and the management team. Now, some of you are thinking about starting nonprofits. Some of you have just joined nonprofits. And we saw that a lot of the nonprofits that you are involved in or thinking about being involved in are at a smaller budget size comparatively to the whole sector. When we're getting started, it's not uncommon at all to ask a friend, a family member, someone who really supports you to sit on our board, as of course we're required to have a board of directors. But I want to be clear here that the board is just as responsible for protecting our resources and managing the finances of an organization as the management team is. Or maybe in those the cases of the smaller organizations, maybe we have just one person, the executive director, right? Maybe our board of directors is actually a working board and they are really in the day-to-day doing the work with us. In any scenario here, we want to make sure that the board and our board members understand that they have a responsibility for oversight for our financial health and sustainability, and for, as we see here, ensuring compliance with particular laws, the same as the management of the organization. This is a depiction here of a few key controls that you can think about instituting at your organization once they get started, or where you are right now. So a segregation of duties is a key control, and that's where we're going to spend the rest of the time in this area. So I'm going to pause on that for a moment. Proper authorization. If you have anybody in your organization that is potentially making purchases on behalf of the organization, hiring folks on behalf of the organization, we want to make sure that there are procedures in place that let people know how to do that and what approval they need and how to document it. Another few things to point out: physical control over our assets. Maybe you are an organization that owns stuff, right? Maybe if you are working in the visual arts, there are supplies and materials that are costly. If you are working in the performing arts, there might be equipment that you own, that you invest in, recording, lighting equipment, things of that nature. Great controls to have is: where are we keeping our stuff and who's in charge of it? And how often are we doing an audit or an inventory just to make sure we still have all of the assets that we think we have? Just a couple others to point out: review and approval. This is a big fundamental when we're talking about internal controls. Who is allowed to, as I said, initiate some purchases, make plans, pass policy? Lots of different things that we want to think about. Who do we need to get approval from? And in what instances? Who should be reviewing our work and at what cadence? For instance, we have a bank account. We should be reconciling that bank account every month, and somebody in the organization should be taking a look at that reconcile and making sure that there's more than one person really that's involved in any one of our financial protocols, our banking, our payroll. We're going to talk about that in just a minute. So segregation of duties. Chat in if you have heard this phrase. Just give me a yes or a no. I'm curious. Segregation of duties. Anybody familiar with this phrase? John, yep. Yeah. This is something that comes up a lot in not just the nonprofit space, but as we see here, a segregation of duties means that no one person should be able to perform all of the functions within an accounting cycle. Well, what's an accounting cycle? An accounting cycle is really any process that is going to move you through a particular mechanism of finance. So we'll say purchases, because I've brought that up a couple times when we talk about approvals. The whole act of purchasing is a cycle. And it starts with, how have we gotten approval to go out and purchase something? Is it within our budget? Is it not? Who is allowed to make a purchase and what mechanism are they using? Is it a credit card? Do they have to pay out of pocket and get reimbursed? How does that data then get back into the organization to get in the books? Is it a receipt, an invoice? Who puts it in the books? And then who ultimately pays the invoice or the credit card or what have you. If just one person is doing all of those functions in an organization, it can become really ripe for either error, which happens because we're human beings, or intentional fraud to be overlooked because there's not another pair of hands or set of eyes in a process. So we really don't want to have one person doing absolutely everything. Now, some of you, if not all of you, are thinking, well, okay, but it's just me in the organization, or it will just be me. So small organizations, I want to name that segregation of duties is difficult for small organizations. So one of the things that we can be thinking about is, who else do we have in our world if we don't have a full staff to really separate these pieces, right? And that could be a board member. That could be an external volunteer. But some kind of checks and balances we really want in our financial processes. This slide lists some examples of where we might want to have some controls specifically. I'm not going to go through all of them. This deck will be made available for you. But as we see here, for instance, deposits, when we're making bank deposits, ideally, the same person who is collecting the cash receipts in whatever way they're coming into your organization, whether it is checks in the mail or handed to you, someone who has access to your PayPal account or your Square account or whatever you're using to process payment, or maybe even cold hard cash that's coming into your organization. Ideally, the person that handles cash is not also the person that has access to your accounting software and the books that you're keeping. We see a couple others here. I mentioned bank statement reconciliation. Someone who is not processing payments, right? Someone who is not the person who is actually writing the checks should not be the same person that's reconciling the bank account, taking that step of really matching the transactions in the accounting system to what's on our bank statement and seeing if anything is missing or additionally added or erroneously added. So these are just a couple of examples. And then here I have a depiction, kind of a workflow. So this is actually a cash receipts accounting cycle workflow. And you can see here that an administrative person receives the cash, and that can be in any kind of manner. I don't necessarily mean dollars, although it could be the green, the dollars, right? That admin person is then logging receipts or logging that data in whatever way the organization needs them to, and making the deposit slip. Notice that they forward the receipts to the development department or staff or individual that handles fundraising, and to the department or staff or individual that handles finance. Development and finance are both logging that information, recording the information in their different record-keeping mechanisms. Here it's software, our accounting software, our fundraising software, but they're not actually touching the cash. So this is just an example, right? And then we have these two departments that are reviewing and reconciling. I get that this is difficult when you are a shop of one, but again, I would think, who else is in our world that we can try to separate a little bit of these duties? Board members, volunteers, what have you. Now, policies and procedures are actually slightly different than internal controls. Often we conflate these terms. We call our policies and procedures our financial controls or our internal controls. That's okay. In reality, in practice, policies are going to be usually high-level statements of how we are to behave in an organization. They should be something that the board has set and adopted. So for instance, something like all cash receipts are deposited in a timely manner. That's a policy statement. A procedure is going to be the set of instructions that helps us comply with the policy. So who gets the mail? Who stamps the checks? Who fills out a deposit slip and goes to the bank? Who reconciles the account? So the order of events and the owner of each, right? And then finally, internal controls are actually mechanisms within your procedure that count as checks and balances. So in this whole process, that reconciliation step of the bank statement is a control. In some other processes that I've mentioned here, going to get approval for a particular purchase of a particular amount or higher is a control step. So it's really that step that almost stops the process for a moment to add a layer of control, if that makes sense. Why should we have them? Now, this may seem obvious, but there's really a long list here. Consistency. We want to make sure that everyone is behaving in the same manner every time. There's always going to be something that comes up that might shift a process a little bit in the moment. But for the most part, we really want to be consistent. It really helps eliminate uncertainty. How am I supposed to make this purchase? Who am I supposed to go to get approval? If we've got documented policies and procedures, it adds clarity. It could be a great reference point when we're training folks. And it doesn't have to be staff necessarily. It could also be new board members or volunteers coming into the organization. Of course, we're reducing our loss of risk and we are promoting sound fiscal management. We're telling everyone in the organization and our stakeholders that this is important to us. We've taken the time to actually document our processes and we're following them. Sometimes you need to have policies and procedures to meet the expectations of external stakeholders. If you are thinking about having government funding for your work, this is often a requirement of the government to have written policies and procedures, and maybe some other funders as well. And as I mentioned, they could serve as a training tool. So this is the hard part. Where do we start with policies and procedures? Because it can be a little overwhelming. Most of the organizations that I work with who don't have documented policies and procedures, it's not because they're not capable, it's because they're too busy. It can be really very time consuming to write all of your processes down. So I would recommend that as you're thinking about your organization, building your organization, working for your organization, you could take one accounting process at a time, right? So I would start with certainly accounting policies and procedures. I think that that's one of the biggest areas of risk for organizations. And then start, think about how to break it out. Maybe we first just write some processes around time reporting. How are we having folks record their time at the organization? How are we collecting it? How are we going through? Then the next would be our payroll process and so forth. We've got a couple here with asterisks. Again, if you're thinking about going for some government funding, and as just mentioned at the beginning of this, Arts Alliance Illinois is a wonderful partner to go with to help you navigate the opportunities that are out there in terms of public funding for artists and arts organizations. You might want to think specifically about time reporting procurement, meaning who are you hiring? And if you are thinking about taking government funding and being a pass-through grantor of that funding, maybe you're going to do granting, re-granting yourself. You want to think about how to document processes around sub-recipients. These are things that the government will really ask you to have in place once you get to that point. So that's a brief touch on internal controls. I'm seeing in the chat, nothing coming up. Does anybody have any questions, thoughts, feedback that's coming up around just kind of this touch on internal controls? Thanks, John. Okay. Again, as questions are coming up, feel free to put them in the chat. Now we're going to move to another topic, which is critical when thinking about financial health and sustainability for your organization. Understanding financial health. I'm going to start with some grounding concepts here. First is the difference between cash basis and accrual basis accounting. These are probably also terms that you have heard either in the nonprofit space or just in your daily life. Cash basis accounting, which is generally where organizations start, I would say, as they are founded or nascent organizations. You can really think about this as checkbook accounting. And I wonder if even that term is now starting to get a little bit too dated, because I don't know how many folks are really like using a checkbook anymore. But if some of you, like myself, had used checkbooks in the past, you're literally writing down every time you take money out of the bank, every time you write a check or pay someone, and keeping a running balance. So it's really just the ins and outs of cash. That's what cash basis accounting is. Accrual basis still involves tracking the ins and outs of our cash, but it also involves tracking something called accruals. So for instance, maybe you perform a service for the community in some way that you are charging a fee for. You have now done something and someone owes you money for it. That becomes an asset. You're owed something. So we want to book an accrual by sending out an invoice. And now we have a receivable, right? So we're really talking about not just the timing of when we're getting the cash or when we are writing the check or paying the funds, right? Paying our vendors. We're talking about the timing about whether when something is earned or owed. So it's not so much about the cash movement specifically as it is about the recording of a debt or something coming to us, if that makes sense. Accrual basis accounting, I have this here because it is required under something called generally accepted accounting principles. Now, when you get to a certain size organization, budget size, you are going to be required to put out financial statements according to GAAP, generally accepted accounting principles, and you will need to be accounting in the accrual basis. So this is something we want to be thinking about, even if we're starting off in a cash basis. Another fundamental concept here, and this is very specific to the nonprofit sector. We have two different types of contributions that can come to us. Already unique to the nonprofit sector, we have a type of revenue called contributions, contributed revenue. The for-profit sector does not have this, right? So we, of course, can earn revenue, and we can also have donated revenue, can have folks making gifts to us where there's not something they're getting in return. Contributed revenue, our donations, can be restricted or unrestricted. A couple of years ago, we changed this language to revenue without donor restriction or revenue with donor restriction. This is a really important concept because if you accept restricted revenue, you're going to have to comply with whatever those restrictions are. A donor can say, I'm going to make this contribution to you, but you can only use it for either a particular purpose, within a particular time period, or a combination of those two things. We have to account for restricted revenue very specifically according to GAAP, generally accepted accounting principles. I also want to point out there are two types of external reports that are really, really common in the nonprofit sector. The first is Form 990. So Form 990 is an IRS form that every 501c, I'm going to stick with 501c3 right now because that's probably where we would all end up in that tax exempt classification for nonprofits. All organizations are required I'll back that up. Almost all organizations are required to complete Form 990 on an annual basis. Houses of worship are not actually required to complete the 990. What is the 990? It's an informational return. We often call it a nonprofit tax return, but really it's an informational return. It's got a lot of information about our organizations besides just financials. It's the most publicly available document that there is for our organizations. We can go and look at almost any organization's 990 online, and as nonprofits, we have to make our Form 990 available to anybody who asks us for it. We're required. There are a few different types of Form 990s that can be completed by organization, and it's really dependent on budget size and amount of assets. So the things that the organization, the amount of assets that the organization may own. The Form 990 is the full 990. There's also a 990 EZ, which is a shorter form that can be filled out by organizations with revenue of $500,000 or less. And then there's something called the 990N. This is a postcard. This is actually very, very simple. There's almost no data that's being collected on the postcard. And this is an available filing format for organizations with $50,000 of revenue or less every year. Now, the other really common financial report that we might undergo and put out in the world is called an audit. An audit is, as we see here, something that's performed by an independent CPA firm. This is really important. If you are working with an accountant, maybe you have a CPA who's keeping your books for you, that is not a person who is eligible to perform our audit. They have to be independent and objective to the organization. So an audit is something where someone will come in and they'll do a variety of testing to see if the data that you've recorded in your accounting software for the previous fiscal period is correct. They're then able to provide what's called reasonable assurance that your financial data is free from significant misstatement, right? So they're not saying that everything is 100% accurate, but they're saying for the most part, you can trust these financials. An audit needs to be presented according to generally accepted accounting principles, those GAAP rules that I mentioned a few slides ago. Whether you need to be audited or not depends on the state that you're doing business in, where you're registered to do business. So here in Illinois, we've recently had a change to the legislature around this. Starting this year in January, in 2024, any nonprofit organization with annual contributions, so that's not all revenue, that's just our donations, right? Our contributed revenue, over $500,000 has to undergo an independent audit. This is important for organizations to understand because they want to be keeping records in a way that's going to help them prepare for this process. And I will also say that independent audits are not cheap. So this is something that organizations need to be preparing for financially as well. Up until 2024, that threshold was much lower. It was $300,000. It's really challenging for organizations at that budget size to really manage through an audit process and afford it. So this is something that a lot of organizations here in the state of Illinois, including Arts Alliance, were really active in trying to get changed, and they did. So now this year, any nonprofit organization with contributions between $300,000 and $500,000 will have to undergo something called a review. A review is similar to an audit. It's not quite as extensive, and it might be slightly less expensive. All right, so that was question coming in actually before we go forward. So those dollar thresholds do not include income earned from programmatic activities, only contributions. Correct. So if your organization has some functionality, let's use a theater. I'm from a theater background, so that's a really easy example for me to go to. If you're selling tickets to your performances, that is something called earned revenue. So, and very specifically, the Illinois statute around this points out admissions fees as something that does not count. So we really are just looking at our contributions. Question, are there tools to help organizations prepare for a financial review? Cheryl, I'm going to think about that and get back to you. I'm sure there are. I am going to introduce a website to y'all at the end of this series that has a bunch of free financial management tools on it. And I'm so excited to share it with you. We do have a toolkit on there for selecting an audit firm, but nothing off the top of my head that helps prepare for an audit, with the exception of an activity schedule. So there's something, and then I'm also going to just think about that a little bit more and get back to Arts Alliance Illinois, and hopefully we can share that information with you. Ellen, same thing. I'm going to get back to you on what a financial review process may look like, although your best bet is to talk with the accounting firm that you're interested in hiring about what it's going to look like and what you need to be prepared for. And yeah, you bet, free tools. I'm a fan. Okay, so now I want to talk a little bit about what we at BDO consider really critical financial metrics for your organizations to be thinking about. Friends, I want to tell you that today is really just a little sampler. There's so much more to say on all of these topics. So there's more metrics than what I'm going to unveil today that are important, but I'm really bringing to you what I think are the most important ones for you to start with. The first are our annual operating results. This is huge, right? So what are our operating results every year? They are our revenue minus expense. Absolutely. It's our surplus or deficit. In the for-profit world, we'd call it a profit or a loss, right? Here we're talking about a surplus or a deficit. But I want to point out something really important. Our operating results are actually our unrestricted revenue minus expenses. So if you are now or will be in the future an organization that gets multi-year restricted funding, which, don't get me wrong, would be great. If you have a foundation or a funder come to you and say, we want to pay for this thing for the next 3 years, great, but you have to account for that in a particular way. And at the end of the year, if you have any of those restricted dollars left over for a future time period, they don't count when we're thinking about this year's operating results. We want to think about what was our unrestricted revenue minus expenses. That equals our surplus or deficit. Another really important metric that I want to talk about is LUNA, liquid unrestricted net assets. To get there, we need to understand a little bit more about our organization's financial makeup. So we're really going to go to something in the nonprofit sector that is called a statement of financial position. Now, in the for-profit sector, we call this a balance sheet, but the nonprofit sector has special names for this. So it's our statement of financial position. Our statement of financial position or balance sheet has 3 main components on it. Our assets. This is very much about what do we as an organization own. And so often we'll see things listed under assets like our cash. What's the amount of cash we have in the bank? Here's where this concept of accrual accounting comes in. What do we have in receivables? Meaning what's owed to us, but we haven't gotten the cash yet. We've done the work, someone's going to pay us, we just haven't gotten it yet. Receivables. Maybe we have investments at our organization that are gaining, that are growing or earning interest, right? So that's an asset. And then importantly, for Luna, we have fixed assets. Maybe your organization owns a facility or a space. Again, maybe your organization owns something like lighting equipment or sound equipment or expensive supplies that we have put on our balance sheet as an asset that's depreciating over time. So what do we own? Our balance sheet, statement of financial position, will also have a section of liabilities, also known as what do we owe, right? So unlike receivables, we might have some payables. Hey, we've received something from somebody and now we owe them money for it, but we haven't paid it yet. So our bills do. Maybe we have a line of credit. Maybe we have a working capital loan and we're able to pull some cash off of it every now and again when we need an influx of cash and then we pay it back. That might be a liability if we've got really any debt that we see here, right? Or maybe some deferred revenue. Maybe somebody has purchased a good or a service from us yet and we haven't given it to them yet. So we still owe them. So it sits as a liability. Now, the third component on our balance sheet is called a net assets. This is really our organizational net worth. We take our assets, subtract our liabilities, and what we're left with are our net assets, right? In the nonprofit sector, we break our net assets down by restriction type. We have unrestricted net assets and we have restricted net assets, right? This is important as well, because now I want to get to this LUNA, liquid unrestricted net assets. This is a metric that really helps us understand our reserves, right? Our runway to either solve problems or take advantage of an opportunity, make an investment in something, maybe pilot a new program. How do we get to understand what our liquid unrestricted, first of all, actually, let me even say, what does liquid mean to you all? When I say liquid, what does that mean when we're talking about finance? What are your thoughts here? Chat it in if you have an idea. What does liquidity mean when you hear that? Or maybe to liquidate an asset. Anybody have any thoughts? Free-flowing funds. Kind of, Sherelle. Yes. How quickly or easily you can access it. Yes, John. I think the word I really want to hear from you all or want to say to you all is really about cash, right? Liquidity is a measure of how quickly an asset can be converted to cash. And Sherelle and John, that might have been what you were thinking, but I just want to make sure that it's clear for everybody. So cash, of course, is the most liquid of our assets because it's already cash. Cash is king. We hear this all the time. Something else might be maybe you have a short-term investment that you can sell. You have stock, your organization, maybe in your personal life, just to kind of get the idea of this concept. Maybe you have stock that you can sell and you can liquidate it in a day or two. It's fairly liquid. Fixed assets, think about that building that an organization may own, or all that lighting equipment that a theater may own. Not super liquid. If you are in a cash crunch and you need to make payroll, you're not going to sell your building or go and sell all your lighting equipment in a day in order to make payroll. So when thinking about liquidity, right, this is a really important concept for our organizations. How quickly, how nimble are we in terms of solving problems with our assets? All right, so back to Luna, liquid unrestricted net assets. We're going to start with our unrestricted net assets. Remember, our net assets are our net worth. Of our net assets, how much of them are liquid, right? Or I'm sorry, we're going to start with our unrestricted net assets, and then we're going to subtract anything that's not liquid. So of our unrestricted net assets, how much of them are liquid? This is our Luna. This is really important because this is truly an organization's operating reserves. Right? Often when we make a surplus at the end of the year, an organization says, hey, I ended the year with $1,000. That's my reserves. Great. What if that $1,000 is left over from a restricted grant and you still are on the hook to put it towards something else? You've promised a funder, I'm going to spend this $1,000 on something else. Well, it's not really available to you, right? So we can't think about that $1,000 as our reserves. We really want to start thinking about what do we own that's both unrestricted and liquid. Why do we need reserves? Well, this may be obvious to everybody else or to everybody, but I just want to point out a couple of concepts around reserves and building up our capital. The first is our operating reserve. That's our Luna, right? This is really about security. Again, it's this runway to solve problems in our organization. We also want to be thinking about building reserves for things like facility or equipment that we may own or any kind of fixed assets really that we are responsible for maintaining, repairing, and replacing. Sometimes this comes up kind of by surprise and we're not prepared. to replace the equipment we need if we're not thinking about it in advance, sometimes years in advance. And then finally, my favorite, the gold ring, the one I will admit to you all is the hardest to come by. But if we start to build strategic plans to try and encompass this, we can get there. So change capital. Can we put a little bit of money away to help us finance our own growth and expansion if that's a plan? Or any kind of innovation. Maybe we want to, again, pilot a program, and we want it to be able to fail, quite frankly, if it needs to. So we want to have some money behind it. And then certainly, do we have any money in the bank to replenish when we're taking from other buckets of reserves? This is not something that organizations are able to do on day one. But if we're thinking about all three of these types of reserves, we can start to really think about it in our long-term planning and make them a priority in our plans and how we're thinking about our budgeting. All right. That was a quick foray into understanding financial health. That's another one that's a pretty deep topic, everybody. Any questions or thoughts or anything coming up from anybody? Anybody learn anything new or at least get something confirmed? Maybe you're like, all right, good. I'm on track. This is already what I'm thinking. All right, I'm going to keep moving as it comes to you. Put stuff in. Thanks, Sherelle. Appreciate it. Okay. Our final topic today is budgeting and true cost. Planning is really an essential practice of all nonprofits. So first, let's even talk about what is financial planning. Again, these are some things that may seem obvious, but BDO believes that there are some tenets that really need to be employed here when we think about our whole approach to planning. From a process perspective, we really hope that your planning process is always inclusive and team-based. So this is another one that I want to acknowledge. If you are an organization of one, or it's just you and you're really thinking about starting something, or you've just gotten started and there's just not a lot of folks involved in the organization yet, you still want to be thinking about who should I be including at what point and how can I be bringing them in as I grow, right? So we really want to make sure when we're doing any kind of planning that we've got folks from finance, from leadership, from programs, from fundraising, from operations, from HR, and from the board on some level involved in this process. We want to make sure that we're bringing in the people who know the most about that area of work of the company so that we can really support our plans in the most accurate way. If you or maybe you and one other person are wearing all those hats, that's okay. Just be conscious of that when you're planning. Am I thinking about this right now from the programmatic viewpoint, from the programmatic needs and perspective? Am I thinking about this in terms of our long-term financial goals and sustainability? Am I thinking about all the operations needs that we're going to need to cover when we're planning? And if you start to get specific about what hat you're wearing, maybe even document all of the different parts of the organization that need to be included, as you add folks, as you grow, you'll be that much more prepared to start to bring people in instead of kind of keeping that process close to the chest. I've seen that a bit where as organizations grow, they're not able to kind of make that switch from operating just kind of solely where an executive director may still do the entire budget and then hand it out to the other people in the organization. Of course, we want our budgeting to be iterative. It just is. Planning is just that. It's just a plan. So when things realize, we have to be able to, as we see, recalibrate and course correct, and we want our plans to be flexible for that. And we also want to be thinking not just about what does this fiscal period need, but are we actually building a plan that's going to build long-term sustainability for the organization? Some guiding principles we want to have when we're thinking about planning. Again, that long-term resilience for the organization. Something might seem like the right opportunity for us right now, but could actually diminish our chances of accomplishing something in the future. So you really want to be, again, wearing both hats, that short-term and long-term view when you're planning. Ideally, our plans are really supporting diversity, equity, inclusion in every way. And I do want to just break here for a moment to talk about equity in finance, because I think, especially in the nonprofit sector, especially in the arts subsector, where I think folks are just naturally inclined to really support areas of human rights, social justice, all kinds of things, especially transparent and equitable compensation. We also want to think about the fact that our financial management is an area where we want to be thinking equitably. Who are we involving? Who are we training? How are we bringing folks to the table? So we definitely want planning processes that are inclusive, and really thinking about that power dynamic, because folks that are managing the money have power. So how are we sharing that power appropriately? Oh, BDO are really, really big geeks around team-based financial management, and certainly team-based budgeting. Our founder likes to say that financial management is a team sport. So why should we be doing this in teams? And again, if you're a small shop or if you're just getting started, you do want to think about the fact that you will need to have at least 3 board members on a board of directors here in Illinois, for our nonprofits. And you can also think about different types of stakeholders or volunteers that may be included, that might be right to be involved. So why would we do this? As I mentioned before, we really want folks who know the most about the programs to be able to inform decisions about how they're going to be resourced, right? Uh, when we have a team-based planning approach, it's great as a communication tool because it reinforces for everyone in the organization or your stakeholders, whoever those may be, what's important to the organization. Remember, these are our goals, and this is what we're planning around. It also helps if you actually have someone who's responsible for finance, who's not also the director of programs or what have you. It helps make sure that there's conversation between those two arms of the organization. I see a lot where folks that are running programs are like, yeah, I'm programs. I'm doing service delivery. Finance is not my job. People in a finance office may say, programs is over here. I'm just doing the data. But we really need a strong integration of these two departments to make sure that our data is accurate and well informed. And then finally, it just allows for more ownership. Maybe you all are not there since certainly a lot of you right now are thinking about going into nonprofit management or starting a nonprofit. Some of you are already involved in nonprofit organizations. Some of you may have had an experience where you have just had a budget handed to you by a board member or an executive director and said, here's your budget, go ahead. And you've had no input in that budget. If you've had that experience, you know how hard it is to feel a sense of ownership over that budget. Usually there's resistance, right? So when we're really including all of the right folks, then it really does feel like we can all make an appropriate investment in trying to realize the goals and plans that we've set. All right, so what is a budget? Again, this seems like it might be obvious, but I do like to say some of these things out loud. Of course, a budget is the outcome of our financial planning process. We go through a process, we end up with a financial plan. And that's what it is. It's our action plan stated in dollar terms. So sometimes organizations can have these great aspirational goals. They're really important to them. They believe in them. But when we go and put numbers to it, when we say, okay, how much is it going to cost? How are we going to allocate the resources we have over our programs? And how much money do we expect to get in revenue from our variety of sources? It can really reality test our plans, right? So our budget is our action in dollar terms. I think sometimes most importantly, our budget is an expression of our organizational values. This is really the place where we can literally put our money where our mouth is. If we are saying, hey, this is why we exist, this is who we serve, this is what's important to us, we should see that reflected in where we're putting our budgeted dollars. There's a lot of different types of budgets that we have at our organizations. The first is a strategic budget. This is a budget that usually encompasses maybe 3 to 5 years. It depends on how long an organization's strategic plan might be. And that's key, a strategic plan. Um, I would actually recommend, certainly, if you're not thinking about strategic planning as you're working in your organizations or conceiving them, that you really do want to think about, where are we headed in the next 3 to 5 years? How are we going to assess each year? What are the milestones that we want to set out each year to help us understand if we're on track to meet those long-term goals? And then really critically, what's it going to cost us incrementally over the course of the next few years in order to do this? How much more revenue are we going to have to raise in year 3 to accomplish year 3 goals? We don't necessarily have to flesh out an entire line item budget with all kinds of detail for every year. That might be too hard. We may not have enough information, but at least understanding, if by year 3 we want to have 5 after-school programs instead of the one that we have now, we need to start to think about, how many more teachers are we going to need to have in year 3? How much more food or supplies or transportation might we need to be able to support? What is our funding pipeline, and what might that look like 3 years from now, right? So we're really thinking about that long-term planning and also attaching some financial metrics and goals. A capital budget has to do with our fixed assets, that the building that we're maintaining, the equipment that we might need to replace. Often, these things are not part of our day-to-day work, and it's easy to not think about it in our annual year-to-year planning. All of a sudden, even if we're renting a space, let's say we are responsible for maintaining certain parts of it, all of a sudden the air conditioning breaks. It always happens. And we don't have any money for that repair because we really weren't thinking ahead or thinking about putting money away for that. So a capital budget is usually, again, a 3 to 5 year plan that's helping us make sure that we're budgeting appropriately for the repair and replacement of our fixed assets. An operating budget, this is the one that we all are probably most familiar with. This is our annual budget for our fiscal year. And this is, as I mentioned, this is the numbers that are helping us operationalize our work, right? A cash budget, we're calling it a budget here, but what I really mean is a forecast. We can take our operating budget and we can turn it into a forecast over the next 6, 12, 18 months, whatever makes sense for your organization, to understand at the end of every month, if we've received the cash we think we're going to receive, and we've spent the cash we think we're going to spend, what's our ending bank balance going to be? So it's a little bit different than the operating budget is going to help us understand if we have plans that will end our fiscal year in either a surplus or a deficit. But the cash budget is going to help us see from a monthly basis if we can actually support our activities every month with the amount of cash that we have. This is important because, unlike in the for-profit sector, where often our output is attached to cash, right? Like maybe we're selling widgets and we produce them, we sell them, we get money. We produce them, we sell them, we get money. In the nonprofit sector, it's not quite that linear. Our revenue is often chunky, as one of my colleagues says. We might have a funder who says, I'm going to give you $100,000 for your work, but not until next year. And I expect you to be doing the work before you get the money. Or, yes, we're going to pay for this, but we're going to do it on a reimbursement process, meaning you have to spend all your money first and then submit to us all of your receipts and reports that we're asking for us to go ahead and look at it and approve it, and then we'll pay you back. So because of these different funding models, our expense and revenue doesn't line up really well. And so we might be planning for a surplus at the end of the year, but we're looking ahead and we're like, oh, gee, July and August, we don't have a lot of activity going on, and we're spending all this money in advance of our gallery, our show that we're opening or something like that. And we're going to be really tight on cash in those months. So that's really what a cash forecast or a cash budget is to really help you predict that and manage through it in advance. A program budget is a smaller portion of our operating budget. And I'm going to show you a graphic on this because I think this is really important. We do like to see budgets built on a program basis, on a functional basis, and I'll get into that. And then a grant budget is an even smaller portion of a program budget because it's highly likely you're going to be having multiple funders who are supporting the same program. So we might have multiple grant budgets feeding into our program budgets. All right, a couple other grounding concepts here in this budgeting topic. There are so many different ways to define expenses. There are a lot of different expense categories. I'm going to share a few with you today. Natural and functional expenses. So our natural expenses, as we see, are expenses that are classified by the nature of the expense, right? Things like salaries, rent, utilities, stuff like that. I call this the what did I buy? Natural expenses. What did I buy? I bought time from people and paid payroll. I bought supplies. I bought the use of a facility by paying rent. Our functional expenses are classified by the type of activity the expense is supporting. So I call this one the what did I buy it for? Now, the functions of a nonprofit organization are its programming, its administrative function. We also sometimes call this management and general. So if you see the letters, the acronym M and G, that's what that stands for, management and general. It's our administrative function. And fundraising. Those are the three main buckets of functionality in a nonprofit organization. You see these on the 990, and we'll see these in an audit as well. Program, admin, fundraising. I'm going to show you what this looks like. So here's an example. We see our functions up here, and we've got our programs actually broken out between, in this hypothetical, this organization has two programs, program A and B. Then we've got our admin function, management in general, M and G, and fundraising. So the functions are really the columns that go left to right. The natural expenses, remember that the what did I buy? These are the rows, the line items that go up and down here. And here we see things like salaries broken out by staff member. And we see non-personal expenses too, supplies, snacks, transportation, things like that. We love this representation or this organization of your financial data and your budget and would highly recommend it. I'll show you why. It really allows us to start to understand the true cost of every program and whether each program is adding to the organization's bottom line or taking away from it. Okay, so notice I don't have any funding sources in here. Like I don't have a state grant as one of my functions because the state grant that you might get might be supporting program A, but so might some other grants or something like that. So we really want to keep these columns just defining our programs, not our funders. Same here. We don't have something here that says program A bus rental because we can see it in this column. It's matrixed that way. We don't necessarily need to duplicate it in our accounts. So natural expenses, functional expenses, right? Let me know if you have questions about this. So then we've got, I'm just going to pull them up here, two different ways to look at our expenses. We've got something called specific expenses, and these are expenses that can be assigned specifically to one or more programs or functions. So let's say you have, again, I'm going to go to an after school. Let's say we have an after school program and you have teachers in your after school program. Their salaries are specifically assigned to after school programming, right? Easy. Maybe you've got supplies that are going to your arts camp that you might have. Those supplies, when you actually account for them in your accounting system, we're going to code them, so to speak, to the arts camp program. They're specific. We also have something called shared expenses. These are expenses that are often paid for in one fell swoop, but are supporting multiple categories of work at the organization or all of the programs and functions of your organization. I think occupancy expenses are the easiest things to use to explain shared expenses. So let's say you're renting a facility for your organization, and that facility is housing your programmatic work. You've got programming going on in your space. Your administrative team members are officing in that space. Your fundraising is occurring in that space. Maybe you have special events in that space. Maybe you've got other administrative activities like board meetings happening in that space, but you're just paying one rent bill every single month. So it's not fair to give the entire rent bill to just that admin function, because some of that rent is supporting your programming. And you want to acknowledge that, right? So shared expenses are expenses that are shared across the organization and need to be allocated by a specific methodology, right? We have to think about, okay, how am I going to allocate this? Maybe I'm thinking about the time that's spent in my space on each of these functions, and I'm using that percentage. Maybe I know the square footage of my space and I've got dedicated spaces. So I'm taking the percentage of square footage that's used for programming, and I'm taking my rent bill and I'm giving that same percentage to programming. Whatever you come up with, there is some methodology that helps you think about how to share these expenses. So here's what that might look like in my example. We've got some expenses that may be specific at this organization. This may be different at your organizations. I want to name that, right? So we've got our program director is being paid specifically to support program A and B. But we've got rent down here, and notice that's going across all of them, and it's just this one bill, right? Whereas our program director can actually track time to program A or program B. Snacks, they're up here in specific because we're going to go out and buy snacks for program A most likely. And we'll know it goes to that. We'll go and buy different snacks for program B, right? We don't know. But here we've got something like rent and utilities that we're just sharing across all the functions. Let's spend a few minutes on revenue and then we'll wrap up. I actually want to even backtrack a little bit to say when you're budgeting, ideally you're starting with your expenses. And I'll tell you why. I would rather see organizations say, what is it we want to do next year? Let's build the plan for that. Let's cost it out. What's it going to cost us? Then you come and say, all right, what are our revenue opportunities? What's our pipeline? We put it together and we see where there's a gap, and that helps inform our fundraising plans. The reason I like that better than starting with revenue is because when organizations say, this is the grant we have, or this is the contract we have, therefore, this is the work we're going to plan for, it starts to limit your growth, if growth is something that you're looking at. It's almost the tail wagging the dog of planning, if that makes sense to everybody. So I wanted to pause there and just kind of say that. I also want to acknowledge that that's hard. I think a lot of times when organizations are new or on the smaller side, that's really a way that they are working. What's the revenue I have? Therefore, what's the activity? But I would just challenge you to see if you can start with your goals first and cost them out. Okay, so then we get to revenue, and we see here that we have a variety of different revenue sources. We've got contributions that might be coming in from individuals. Maybe we're doing some grant writing and we're getting grants from private foundations. Maybe we're looking at corporations for either sponsorships that don't come with any kind of, something in return for those corporations, or maybe now, corporations have their own granting program. Then we've got government funding, which can also look a variety of ways. And then finally, we have earned revenue. So these three are contributed revenue, individual, foundations, corporations. Government is often its own type of revenue, its own bucket. And then we've got our earned revenue, maybe those admissions or tuition fees, or maybe any kind of fee for service that you're charging. Each of these have different considerations in terms of what's required to raise them successfully and consistently and continuously. Some pros and cons with each of these types of revenue to just kind of think through. People talk about revenue diversification all the time. I agree that it's important. It doesn't mean, however, that you need to have all of these types of revenue represented. Maybe you're very heavily funded by foundation grants. That's okay. Just recognize that and make sure you got a lot of different funders here, or work towards that anyway. So that if one foundation maybe has a change in giving priority, which happens all the time, and they say, hey, next year we're not going to fund you anymore, it's not the end of the organization, right? It's something to overcome for sure, but ideally you have other funders in your hopper, so to speak, to help fill that gap. Now, when you're doing your revenue planning and when you're budgeting for revenue, I want you to use the same program basis. We've got our programs, our admin function, and our fundraising function. Think about any revenue that you might be receiving, contributed revenue that's restricted to a particular program. Think about actually putting that revenue in that programmatic column. You also want to put any earned revenue that you might be getting in that programmatic column. Any unrestricted revenue, general operating dollars, anything that anybody's giving you that says, you can do whatever you want with this, I would recommend that you put it in one of these two columns. It doesn't matter which, just be specific. You can see here in our example that this organization decided that their individual contributions, which are not restricted, they put in fundraising, as well as their gifts from board members, which are also unrestricted, and some other types of individual contributions. Their special events, their gala income, they're also putting in fundraising. The only revenue they have here in admin is some interest or earnings coming from their investments. This is totally cool. I love to see restricted revenue for programs as well as earned revenue for programs showing up in the programmatic column. The reason being is because when you put this all together, and we can see here, I've just collapsed our expense budget down to 2 lines down at the bottom, just for ease, so we could get it all on the slide. We start to see what is the restricted revenue that we have going towards program A, right? And what are the expenses with their fair share of those shared expenses in program A? We do the same for program B and so forth. So what we ultimately get to see is that program A is going to run a deficit of about $16,000, whereas program B is going to earn a surplus. This information is not necessarily good or bad, but it's powerful. It's okay in the nonprofit sector if our programs are not running a surplus, right? We're nonprofits. But what we want to see is that we have enough unrestricted dollars coming into our fundraising function to subsidize anything else in the organization that's losing money. We can see here in my hypothetical, this organization still has a little ways to go. They're still in total planning for a deficit of almost $15,000. So they really want to be working up either more unrestricted funding or more restricted funding in the areas that are underfunded. When you plan this way, now you can really start to build a fundraising activities calendar or direction where you need to go that's really well informed by your needs. All right, everybody, we've got about 10 minutes. Want to see what's coming up for folks, if anything, any questions. We talked about a lot and very quickly today. We talked about internal controls in an organization. We've talked about some key financial metrics and understanding our financial health. And then we just talked briefly about budgeting and true cost of our programs and how to think about planning in a program-based or a functionally based way. So let me know if you have any questions, thoughts, concerns, compliments. I'll take them. I see one from Delilah. Thanks, Delilah. And I'll give you a few minutes, a few moments to type. And if we don't have any questions, then I'll turn it back over to Jess. A question coming in. Some nonprofits raise money by taking donations of goods or services, yep, our in-kind donations, and then selling them via a fundraising event like an auction. Is there something we should know about how to value non-cash contributions? So a thrift store function is another example. Yeah, it's actually a pretty big topic, John. And it's something that I can reach out to you separately about too with a little bit more detail. Um, I would say that from an in-kind perspective, there are certainly rules around donated silent auction items and what should be acknowledged. First of all, when we're taking in-kind goods or services, an organization should not value that in-kind donation for the donor, if that makes sense. We thank the donor for their donation of X item, something like that, or X services. It's really up to the donor to be responsible for valuing those types of things for any kind of tax write-off for themselves. And we don't want to, we're not in the business of telling donors what they can and cannot write off on their taxes, right? That's for them to decide. I actually don't think that in-kind donations are, you can write those off on your taxes anyway, but regardless, we don't want to tell the donor what the value is. For ourselves, we need to list when we actually record in-kind donations in our accounting system, which we want to put them in at the fair market value of that donation. We also have to record an expense on the other side. So generally those two things wash out. So let's say with services, let's say if you got pro bono legal services, we would record a quantitative amount that is a fair market value for what we received, right? What would we have had to go out and pay if we got those legal services and we paid for them? But then we also want to record an exact same expense line so that they wash out to zero. For services. This really helps us understand what it takes to run the organization. We don't want to just not acknowledge that we got this important thing that we would have had to pay for anyway for free. With silent auction donations, I have to go back. There are some pretty specifics around this in accounting, so I can follow up with you, John. But we might actually see a loss, right? Because if you're recording something at its fair market value, but the thing actually went for less or more at your silent auction, we might see a loss or a gain there. Cheryl, there's not like a really easy place to go for fair market value. You actually kind of have to shop around, if that makes sense. So with my legal example, you could actually ask the lawyer that is donating those services to help you value the services so that you can put it in your books properly. Otherwise, you'd have to go and just get some, what are people charging for their legal services these days or for their consulting services these days so that we can get something in there that is appropriate. Any other questions coming up? All right. Then let me actually share a few quick resources and then I'll give it back to Jess. I really encourage you all to go to a website called strongnonprofits.org. This is actually an area of the Wallace Foundation's overall website. They've got a Strong Nonprofits toolkit on their website, but if you just put strongnonprofits.org into your browser, it should come up for you. BDO and the Wallace Foundation created this website or carve out on their website, I mean, almost 15 years ago now, I think, and we continue to maintain it in partnership with the Wallace Foundation. There is like 45 free tools and resources around nonprofit financial management on this website for you all, as well as tutorial videos, articles, things like that. So one of the things I want to point out that we have there is an internal controls self-assessment checklist. So this is something that you can go through and think about, do we have controls in place in these different areas of the organization? If the answer is no, right, it might be something to think about. Is it something that we want to think about instituting this year? We also link to a really great resource by our friends at Compass Point. They've got a whole guide to building policies and procedures and a sample document there for you to use and update and edit to make sense for your organization. We have a financial health analysis tool. So you could take your Form 990 if you have one already, if you are already up and running as a nonprofit, and you could fill in this Excel tool to help you understand something like your liquid unrestricted net assets, your cash on hand, things like that. So this is a tool, and you can see that we've got some information here on what part of the 990 you would find this information to plug into the tool. We have a budgeting template that I want to share with you, everyone, and we have a video tutorial on how to use it. This budgeting template is not only going to help you think through all of the expenses for your organization, it's also going to help you think through maybe how you want to allocate your shared expenses. So we start here by putting in our personnel, and we actually have you spread every staff member's salary across programs and functions of the organization based on the time you think they're going to spend in each program or function. You can then use this to get a full-time equivalency in each program, that FTE, maybe you've heard that before. And you could use that FTE quotient as a proxy to allocate other shared expenses. So I definitely want you to take a look at that. And there's also a cash flow template on strongnonprofits.org and a whole bunch of other great resources. So I hope that you check it out. A couple questions did come in. This is not like the retail world. We would have cost of goods sold for purchased inventory since our cost is zero. Correct. That's right, John. And that's something that I can follow up with you about offline as well. Although if you have actual inventory at your organization, like if you sell merchandise or something else, you might use a cost of goods sold line item. Sherelle, do you know the typical questions for a financial review? It depends on your auditor, Sherelle, and it's not so much a series of questions, although there will be some questions about your internal controls that they'll ask you. It's more that they're going to ask you for a whole bunch of documentation and data around some of the transactions that you've booked into your accounting software. So the first thing that you're going to do in an audit or a review is turn over a bunch of initial documents to the audit or review team. Things like your balance sheet out of your accounting software, the full general ledger, which is something that if you're using, well, any accounting software, but like QuickBooks, you would run that out of QuickBooks. Any receivables or payables, your board minutes for the past year, all kinds of stuff they're going to ask you for. And then from that, they are going to select some transactions that they want to look at all of the documentation for to test them, so to speak. So if you booked a deposit of $2,000 on a particular day, and they choose that one as a sample that they want to test, they're going to ask you for all of the information around that particular deposit. What was it for? Can you back up why someone paid you this? So you really do need some good record keeping. So unfortunately, you can't predict exactly what's going to come up in your review because they're going to pull it from your specific data. All right, we have 2 minutes left, so I want to make sure to turn this back over to Jess to say goodbye. Thank you so much, everybody. I really enjoyed being here with you today.
Thank you so much, Gillian. This is wonderful. Just want to give another appreciation to our incredible interpreters. We want to hear from you all about your feedback. So we're going to drop a link to a feedback form in the chat. I also want to just plug the final day of our Creative Nonprofit Getting Started series, which is tomorrow at 10 a.m. We're going to have an amazing panel of nonprofit leaders talking about their experiences. As a reminder, that program, as well as this one, is recorded and will be available on the Arts Alliance YouTube page. We have a lot of amazing programs coming up, and I really want to encourage you all to stay in touch with us, to sign up for those programs, and to let us know what kind of programs you want to see. You can chat with someone one-on-one at the help desk about any further questions, specific situations you might have at support.artsalliance.org. I'll drop that link in the chat as well. We would love to see you at a future webinar, and I hope you enjoy the rest of this beautiful day. Thank you all so much for being here, and see you soon.